All right, Tasty Nation, I want to do a real quick video on earnings. So, and again, excuse me for my cough. So today, after hours, as you can see here, Apple had earnings. So let me lead you back to what you got to watch out for with earnings. So, I'll zoom in right here. Right. So let me adjust this real. Okay. So here's a look at Apple going into earnings. All right. So earnings was right here, and if you click on it, it'll show right earnings. Um, they estimated $2.06 per share, and it actually made 2.1, so it beat earnings, right? And these were held after market close. All right, so that's this tick right here. This is today though, right? And so when you look at this chart, this is only what happened up to earnings, right? So the high was 148.09, if you can see there. And look at IV rank. If I zoom out just a little bit, you can see, IV rank's at 60.1 over here, right? And you can see IV rank has been climbing in Apple from here, right? Because as you get into earnings, IV rank always climbs higher. So with earnings, it's usually a volatility play, meaning if I scroll back, let's look for the next earnings, okay? So I'm going to zoom in, and I'm going to look here. Here's when there was last earnings. Okay, so not only what I want you to pay attention to is not only the direction of the stock when earnings was announced. So as you can see here, last time earnings were announced, the stock price shot up, right? But what you really want to pay attention to is the vol. See, look at the IB rank. It just collapsed the very next day. Watch, I'll just zoom in. So the stock market closes, and after hours, Apple announces earnings. The very next day, the stock market opens, and boom, it jumped up, right? But look what happened to IB rank right after. It just collapses from, what is this, 40.69 in this case, and in one day literally dropped all the way down to 21, so by half. And so that's what you want to play. So when you put on earnings, if you do an earnings play, usually like if you know that Apple is gonna, for example, gonna have earnings after the stock market closes, you want to put on that play, like maybe 30 minutes or an hour or so before the stock market closes that day. So I'm gonna fast forward again to today. Oops, I'll just go like this real quick. Okay, to today. And not only do you want to see, now look, if you just, I don't know, can I see this? Okay, so yesterday, if you're going by the way I chart, you'd be saying, okay, well, wait, excuse me, based on this, Apple's going to go up, right? Because it's green here and everything's green, right? IV rank is high. So let's say you do, and depending on how you want to bet, if you do a golden gecko or an iron condor or whatever, or a strangle, you have to be right, meaning it has to stay within that range, or if you're just doing the put side, you want to just bet that it'll go higher, right? So here's the beauty about Tastyworks. I'm going to go to here. So here's Apple, right? And you see this shaded brown area? This is the expected move of Apple. Okay, there's no earnings, there's no expiration, so this is just this is what the expected move of Apple is. All right, so from maybe, I don't know, what is that, 142 to maybe 152.5, right? So now I'm going to go back to the chart, and now let's look at what happened after hours. All right, so I'm going to zoom in real quick. Here's today, and here's after hours so far. So today, right, it's been up. I mean, if I zoom out the last 5 days, I'll do 5 day, 15 minutes. I'll switch this to 5 day, 15 minutes. So, whoops. Okay, so here's 5 day, 15 minute. So as you can see, this is the last 5 days, and yesterday, which is Monday, shot up, right? And then this is after hours, and today, of course, it shot up again. Now, here's what happened after hours, as you can see. So let me go back to the daily chart. Here's the daily chart, right? So based on today, you're thinking, the stock is going to go higher, right? Well, here's yesterday, right? Well, here's green. So you would be betting higher. You would have been right the next day, and you would have been right today. So Friday, Monday, Tuesday, you would have been right. Okay? Now, earnings come out after the market closes, and so let's see what happens. Here we go. So Earnings happens, okay? It shot up as high as 149, and look, it's down around, I don't know, where is it now? It shot as low as, I don't know, 143.8, and now it's hovering around here. So if it opens like this, it'll gap down tomorrow, right? I mean, it'll open up, it close here, and it'll open up down here. We don't know what's going to happen yet. We got to see how that plays out, tomorrow. But as of right now, here's what happened after hours. Okay, now remember now, it did 2.1, so it actually beat earnings, okay? And there was a conference call. So on conference call, I don't listen to the conference call, so who knows? Why did they do that? Maybe they announced that they delayed a shipment. Maybe, I have no idea. Let me see real quick. Okay, so based on current news, it says around after hours, it says it's losing. Apple is losing ground in China again. That was, that was the news from the conference call. So that's what happened. The stock market, the stock dropped. All right. Here's what's interesting though. Okay, I'm gonna go back to the chart. Remember this? High of 149, low of, I don't know, 143.69. So let's go back to Tastyworks. High of 152.5 is the range, right? Low of maybe 142. Well, look, if you had sold a strangle in Apple and it expires, let's say this week, right? So let's see you did this. Go to strangle, or I can do a golden gecko, but I don't want to do that because, well, let's say you had to because but in this case, we're gonna search for something that expires. Okay, we'll just change the expiration date. So here, see this expiration date here? That's in 45 days. We want something that expires in, I don't know, 3 to 5 days if you're doing an earnings play. Okay, so for example, this expires this coming Friday. All right, and if you did a strangle around here, you would have done something like this. Okay, so you're betting it'll stay above 143 and below 152.5. Right? According to this, now this is after hours after the fact, so it's just skewed. So you have a pop up 59%, click on this, probably recurring 50% is like, 2 because, it's so, because look at the time frame, right? This expires in 3 days. So this is going to be either a winner or a loser. So that's the thing. Here's what's interesting, right? Look at the 142.5 and 152, let's say, right? 142.5 and 152. Well, what did it do? It's above. See, it stayed in its range. You see that? So I wish I could have done this before earnings, but I just didn't have time today because I don't really do earnings plays. Here's where it gets kind of creepy though. So it depends on when you close this trade too. So you would have be able to collect this probably more because Ivy rank already collapsed, okay? But it's still showing 60 here. So watch tomorrow morning. You're gonna see the big difference. But I kind of wanted to give you an idea. So there's all kinds of ways to play earnings, right? So if you're right and it stays within that range, you're going to make a nice little profit. If you take it off as soon as the market opens, it stays in this range. Now, what if you do the earnings trade and it ventures lower before, the market opens, it's perfect. You could have closed the trade, you don't, but later on in the day, like 2 hours later, it goes below. Then of course your trade is going to lose money, right? Because it expires in 3 days. So earnings, you got to be careful, and you always want to put on the trade. You want to get into the habit of putting on the trade and managing it and taking off the trade at the same time every time you do them, so you get mechanical. But I don't really talk about earnings too much, and because Apple and it's 45 days expiration today, it was just perfect. You could do it. Now it depends. You could play. You could say, well, wow, what happens if it's a loser? Do I just, what can I do? That's a whole different beast. You could have done in Golden Gecko where with shorter time frames. You could extend the time frames, right? Collect more, and you get 10 days more to manage it, meaning you can give yourself a little bit of time, and you want to stay within this gray shaded area, okay? And then manage it that way. But it's really all about this IV rank collapse. Now watch, it's at 60, right? I'll go back to the daily chart. Okay, it's at, so I gotta move it over here. Hold on. There we go. There's Apple, right? So tomorrow you're gonna see this collapse. Okay. Now the funny thing is though, it should collapse because earnings is done. But what if based on that news, it just tanks further, meaning it does this upon the opening, right? And it just keeps on going down. If it keeps on going down, you'll see IV rank kind of stay high because when a stock drops, usually IV rank continues to go higher. Okay, so this is going to be really interesting. I'm glad we're looking at this. It's a great teaching time for you folks who are new to options or kind of just getting started. Hold on, let me double check one thing. So if you just Google Apple and click on news, you'll see. Here's what happened. Really, Apple released its earnings report. Posting earnings, and you basically here's what it is. It beat earnings, but it missed on revenue. So you'll hear all the guys goes, yeah, well, that's what happened. But no one knows, right? Who knows? This could even go higher tomorrow. Upon opening, you'll never know. But the reason why I wanted to do this real quick video is to show you folks how to play the IV rank. In fact, I will go like this and I'll just load simply IV rank. And you can see it a lot better. And I'll go auto zoom to a year. Last time I did, okay, so look. Last time I did earnings, see? You can see how IV rank collapsed, right? Here's last time's earnings here. See how IV rank collapses right after. Here's earnings here, either way. So as long as you're right, or even if you only did half of the golden gecko, and you did something like whatever, as long as you stayed in that range, wait, hold on. As long as you were right, I mean, as long as IV ranks collapsed and it didn't make a huge 2 standard deviation move, you should be okay. Like a standard golden gecko would look like this. Right? But if you're doing earnings play, you'd bring this in a little bit. So under expirations, like I said, you could bring this in to, I don't know, 10 days if you want, and I'll zoom out a little bit. And if you want to play earnings, right? So you can bring this in a little bit, and you can still be at 1 standard deviation. Let's see, 84, right? That's what I like about the golden gecko. You'll know 84%, and you know you're knowing what to look for. 2%, oh, you can't really get there, but this one you can. Here we go. And this one, let's just do that. You still would have collected 93 bucks, right? And that means in this case, you want it to stay in between the 140 and 155, right? So let's say it opens at tomorrow. You still have 10 days left in the trade. It'll show 9. IV collapses from 60 to 30. You take off your profits as a winner. It's not gonna be a full winner because you would have to wait the whole 10 days, right? But that's one way you could play it. If, let's say, you're doing it inside an IRA account because you can't sell naked, this is what you would do, right? I just wanted to just throw that out there, and let's just see what happens tomorrow. Have a great night.